Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer of First Source Wealth Advisory Services. Over the last several weeks as part of Market Share, we've shared information on corporate earnings, inflation, and interest rates, very common concerns for investors. Today we're going to take a little bit different approach and talk to a risk that doesn't always get the headlines, but is today. And that's geopolitical risk. Basically the risk that something in the political nature of a country changes such that investors are impacted, and that could be good or bad. Today, we're going to talk about the United States and China, the two largest economies, and some geopolitical issues that both are facing today. When we start with the United States, we have the pending debt ceiling limit, infrastructure bills, and Federal Reserve Chairman Powell's term ending in 2022. The one making the news right now is the debt ceiling limit. As you heard last week, Congress has agreed to an extension of that debt ceiling limit until December 2nd. The reality is we will probably go through this process of where Congress is bickering over raising the debt ceiling limit. And we know that uncertainty can create volatility in the equity markets in particular. So we'll be watching that closely. We have two infrastructure bills that are being proposed. One is traditional infrastructure, being roads, buildings, broadband, things like that. And then a second one, which is social infrastructure, which is about $3.5 trillion. Both of those have the ability to impact investors' decisions going forward. Obviously, those bills are over multiple years, so the impact would be spread out over a much longer period of time. The third topic in the United States that I would consider geopolitical risk is there is now conversation about potentially replacing Federal Reserve Chairperson Powell when his term expires in February of 2022. Now, traditionally, the Fed has been independent of Congress, and that's a nice feature to have for investors, but you could see how politicians might want to change that mix and that relationship, and we'll have to see how that plays out in early 2022, but it's clearly something investors will focus on after the first two issues are addressed. Now, when it comes to China, there's really two issues that they have, and the first one is related to technology companies. Over the last 2 months, they have had a, quote, crackdown on technology companies. They've been more involved in what decisions are being made and the impact in the market. And what we've seen is a lot of the big tech companies like Alibaba and Tencent have fallen between 20 and 40% in price over this time. Not only have we seen that price drop, but the government of China has also had agreements with these companies to commit tens of billions of dollars to other social programs. And so that ultimately will hurt the profitability. Now you're like, oh geez, why does that matter to me as an investor? It matters because China makes up a large portion of emerging markets. And most investment portfolios, including ones that we do here at First Source, have a portion in emerging markets. And so emerging markets, which had done very well early in the year, have struggled over the last couple months. The last topic related to China is related to energy. This is really twofold. China knows that they have to create a more climate-friendly environment for energy to be produced and how they go about creating energy. And what they've done is started to cut back on coal, and because coal was so important to their economy and to their energy business that they've actually had to cut back energy production. So you now have manufacturing firms that are shut down for 2 or 3 days at a time simply because there's not enough power being generated. And if you think about China being the supplier of manufactured goods to most of the world, if a bunch of the plants are down, that creates a problem in the supply chain and getting goods and services to individuals. Now this is a more recent event, so we're going to have to see how China decides to handle these rolling outages of energy and power going forward. As always, these are things we're paying attention to. I know we talked about earnings, we talked about inflation, and we talked about interest rate, but geopolitical risk is another one we take into consideration when building portfolios. So we are paying attention to these topics. As always, thank you for the opportunity to work with you and your family, and have a great day.